Hello traders. Welcome back to today's Nifty post-market analysis. In our pre-market outlook, we clearly mentioned that Nifty was likely to remain flat and range-bound, and that's exactly how the market behaved today. Let's break down how the day unfolded, how our prediction played out, and what key levels to watch next. Market overview: Nifty opened the session on a slightly positive note but without strong momentum, confirming the early cues we saw from global markets. US markets were flat positive, Asia mixed, and Europe slightly negative, all pointing toward a neutral sentiment. Throughout the day, Nifty hovered within a tight band, respecting the resistance near 25,968 and support zones around 25,788 to 25,700. The index gradually drifted lower, closing the day near 25,732, down about 0.5%, but still very much within our expected range-bound setup. So, the day went exactly as projected: no breakout, no panic, just sideways to mild negative consolidation. Price action review: let's talk about intraday price action. After opening, Nifty initially tried to test the upside, but sellers quickly took control near the resistance zone, confirming that the market lacked strong buying pressure. From there, we saw a steady decline with lower highs throughout the session. The index respected key intraday support zones. Around 25,750, we saw minor bounces. But each attempt to recover faced selling pressure near 25,850. By mid-session, volume tapered off, indicating traders were avoiding fresh positions, classic range-bound market behavior. In the final hours, Nifty slightly recovered from its intraday low of around 25,700, closing at 25,732, showing mild buyer interest near the day's support area. This confirms that buyers are defending the 25,700 to 25,750 zone, but momentum remains muted. Technical summary: from a technical standpoint, today's candle forms a narrow range red bar, signaling indecision and continuation of consolidation. Let's recall the levels. Resistance zone, 25,968, 26,038. Support zone, 25,700, 25,788. The price stayed between these ranges the entire session, a clear sign of sideways consolidation. The overall market structure remains intact. Nifty is neither showing breakdown nor breakout signs yet. If Nifty breaks below 25,700, we might see short-term weakness toward 25,600, 25,550. On the other hand, a move above 25,900 to 25,950 could open the path toward 26,100 again. So as of now, the index continues to consolidate between 25,700 and 25,950. Global cues or sector performance: global cues remained mixed today. US futures were flat, Asian indices also sideways, and European markets opened slightly weak. That muted sentiment carried into our markets as well. On the sectoral front, IT and FMCG managed to hold steady, while banking and metals saw mild profit booking. No single sector provided leadership, adding to the range-bound nature of the session. Closing summary or outlook: so to summarize, our morning prediction of a flat and range-bound Nifty was spot on. Nifty respected the defined support and resistance zones. The day saw low volatility, limited volume, and tight movement. For tomorrow, keep a close watch on the 25,700 support. That's the key level bulls need to defend. If that breaks, the next support lies near 25,535. On the upside, the first sign of strength will come only above 25,900, 25,950. Until then, expect sideways to mildly negative consolidation to continue. That's all for today's Nifty post-market analysis. If you found this helpful, hit like, share it with fellow traders, and subscribe for more daily updates.